Good afternoon, everyone, and welcome to this webinar. My name is Kieran Stevens, and on behalf of Williams Medical, I'd just like to take this opportunity to welcome everyone to this webinar on unlocking the story behind the numbers. This webinar is presented in partnership with Sandison Easson Medical Accountants and is designed to help GP practices better understand and interpret year-end accounts with confidence. I'm delighted to welcome Katie Drew, who is Head of Primary Care Development at Sandison Easson, who will be leading the session today. So yeah, thanks for joining us, Katie. I'm sure you'll introduce yourself in a second. A few bits on housekeeping before we start. So this webinar is scheduled for 1 hour. Like I mentioned at the start, we'd like to invite your comments and questions throughout the session. So if you do have a question, please use the chat function. And like I said, this will just be at the top of your screen. This session will be recorded and will be available on our platforms shortly after the session. And we'll also include some resources as part of our post-event communications. Just a note to say that as part of the session, we have issued some example practice accounts via email. So hopefully most of you will have had the chance to see those earlier today. I'll also pop a copy in the chat shortly. So without further ado, I'd like to hand over to Katie to start the session.
Thank you very much, Kieran, and welcome everybody to the session this morning. Kieran mentioned that I work for a firm of specialist medical accountants. My current role is Head of Primary Care Development, which is a bit of a mouthful. It basically means that I've got a nice mixed role that takes advantage of the fact that my background is as a practice manager. I've spent time in practice management, so I have some understanding of the day-to-day role that you're undertaking at the moment. But I've returned to my roots. I'm a chartered accountant by profession, so I've returned to accountancy life, and I prepare accounts, pension forms, average earnings, so the general day-to-day stuff you'd expect from your accountant. But I also manage the team at Sandison Easson that provide additional financial support to practices, which means practices that have outsourced their day-to-day bookkeeping requirements right up to sort of finance director level support with management reporting, cash flows, etc. I'm still involved in that. So I share the pain when we're looking at a statement for some income that's come in and there's no idea, no clues as to what it's for. And I also do events like this as well. So I'm a speaker and trainer, individually, groups of practices, online webinars, larger conferences and events such as Best Practice I speak at. So I have a great fun role that gives me a lot of enjoyment. I never have time to get bored. Just a quick word about Sandison Easson as we set off on this afternoon's webinar. We specialise solely in the medical profession. So we're dealing with primary care, secondary care all day long, and we have a team based in the Northwest and practices, GP practices and clients nationwide, and we provide the usual range of advisory services. So that's just a very quick overview. If you're interested in any of our services at the end of the talk, please just get in touch and my email address will be available. But I'm conscious we've got a lot to get through this morning, a lot of excitement before us while we look at just unpacking a little bit about a set of GP practice accounts. It's a document that before you became a practice manager, you're unlikely to have dealt with any financial accounts that perhaps look the same way as your year-end accounts do. So I just wanted to unpack a little bit of the information that you will find in them. So we'll be looking at things like current and capital accounts. What does that mean? Types of income and expenditure, some terminology in there as well. So as a basis for that, you should all have received, and I think Kieran was going to pop in the chat, a link to a set of example practice set of accounts. If you haven't got a copy, don't worry, because I've tried to sort of clip and snip bits onto each of my slides, but it might just be useful for you to have next to you on your screen if you've got a dual screen set up, etc. So the example set of practice accounts, these are purely an example, as the title says. They're not based on any practice and have no relation to any of our clients, but we use them almost as a training tool and to give an overview of what a set of accounts can look like. And at the outset, I would say this is a set of accounts for a GP partnership, and it has 4 doctors A, B, C and D. It's also a set of accounts for a 12-month period for the year ended 31st of March 2026. And you'll probably have found out if you used to have a non-March year end that sometimes accounts can be for different periods. They might have been for a slightly longer period, such as 15 months, for example. Or you might have a shorter period where you have a change in partner, and as part of the agreement in that practice, you have an interim set of accounts. But first and foremost, they are a historic record of financial performance. It's already in the past, even if you're the practice accounts meeting booked, and we're now into June, so I know we're very busy getting those meetings booked and preparing the accounts for them. They are already in the past, they are historic. But there's a few reasons why we need these sets of accounts. Firstly, to calculate our taxable profits for HMRC, we use the figures within the set of accounts to help us to do that. They're also a really useful tool to help us improve profitability. By looking at what's happened historically, we can look at what's changed, where the income's coming from, for example, that it didn't used to, and we can be alert to any changes in that. We also use them to help estimate future drawings, pensionable profits. They are the basis of where we do those calculations from. And then there may be some practical reasons as well. If you're looking to involve a new partner in your partnership, then really important that they see them and actually perhaps have a meeting with your accountant to discuss what they really mean. And again, the bank may need a copy, perhaps from the practice perspective, but also from the individual partner's perspective as well. How I'm going to structure this session is I'm going to work my way through a set of accounts with you, as I mentioned, page by page, but also interspersing a little bit of information about some of the areas as we go along. And in particular, I'm going to delve into the income streams as well. I think that's really important, a really key area to look at. But again, there are a number of key pages and we will cover all these as we go through. At the start then, we've got our title page that basically says what I've already explained. It's a 12-month set of accounts for this partnership of 4 partners. And then we turn over the page, and the way our accounts are structured may be slightly different to yours, but they will hold the same information. We try and structure our set of accounts to make it really easy to get the headline figures, but also see the detail in behind. So after the approval page where the doctors sign that they've approved that particular set of accounts, we've got our contents page. And you'll see I've put some little colourful brackets there just to show how we split the set of accounts up. So after the accountant's report page, we have our profit and loss account. And behind that document that's a summary of the profit for the practice, we then have the schedules of income and expenditure that give you all the detail of what that summary page says. We then have the balance sheet section of the set of accounts where we have our overall balance sheet figures, and then that is followed by 4 pages giving a little bit more detail to some of those figures on the balance sheet. Our last couple of pages, pages 10 and 11, are our tax comps. So I'm not going to dwell on those this morning, just to say that they are there in order to then calculate the figures to go on the partnership tax return and then flow through onto the individual tax returns. And at the end, we've got our appendices that give a little bit more information on several areas. And again, there may be additional appendices. If you've got a dispensing practice, you'd have your dispensing information on a page there. Or if you've got a more complicated property, again with expenses and income from that, then we would also add that as an appendix as well. But the three standard ones we include are for your QOF, for superannuation, your practice statistics. So turning the page over onto page 1, I mentioned that the first page is the accountant's report. And really just to comment on this, that we don't audit a set of GP partnership accounts. An audit is a completely separate way of doing it, where you have a systematic way of sampling different transactions and following them through from the start to the finish. What we do is we look and we check the information we're being given, but the accounts are prepared from the accounting records and then from the information and explanations that we are given. Possibly one of the more important pages then in the set of accounts is your profit and loss page, because you will need a place somewhere in your accounts to go and find out what your net profit for the year is, and also to see how that is allocated between the individual GP partners, how it's shared out. Our set of accounts, we keep the 2026 figures in the left-hand column, and then we have the comparative figures in the right-hand column there. So you can see, even from this summary page, that there's been an increase in the net profit for the year, and that is as a result of both increased income and despite having increased expenditure. It's then allocated amongst the 4 doctors at the bottom, and you'll see again that there's slightly different amounts between doctors A and B and doctors C and D. And those explanations of those amounts will be found in the notes on some of the following pages. It's great to see an overview then of where your net profit and your income and expenditure has gone for the year, but really important that we delve into some of the detail. So as I mentioned, we've got the summary page, and then we've got pages following it that do give that detail. And for the average practice, the income is generally over 2 pages, because you will find that you have so many different income streams that make up the revenue coming into your practice. And I realise that this sheet is too small, so I've got it in a bit more bigger text on the next page. But what I just wanted to pull out at this stage is how we then categorise the different types of income streams that practices have. So we start at the top with the National Health Service income, which is your global sum QOF monies, and then you've got all your national and directed enhanced services, which includes things like your vaccinations, for example, and would have included your advice and guidance, weight management. You will then have, depending on where you are in the country, you will then have your local enhanced services. And these will be dependent on what's available to you in your geographical area and what you choose to get involved in as well. In that, for example, some practices might have a local scheme that they're able to provide sexual health services if you've got a GP or a nurse that has that ability to provide that service. There is then the PCN funding to add into that as well, and that's been really important to have that as a separate category recently to identify what funds are flowing through from your PCN, so looking ahead as to the changes in the funds that will be coming through your PCN. Drugs income purely means those PPA claims that we do each month. And then other NHS income is things like your reimbursements, perhaps for your locums, for your property, and any other ad hoc NHS income. And then we split out non-NHS income. So that's important to know what is your private work in your practice, and then you can use those figures for looking at things like preparing the calculations for your pension forms, for your pensionable profit. That was the overview then of the various areas. But again, when we look at the income in more detail, and I've just split this one page just side by side on this slide, just to show that again, just with the income summary page, we still split this down into your 2026 income in the left two columns, and then your 2025 comparative figures in the right two columns. And again, what we do is we provide the individual income stream amounts, but we also put subtotals against each category there. And that's about being able to look at these figures and see at a glance almost which categories have performed well this year, which have perhaps lagged behind last year. And again, at a glance, we can see the PCN funding, for example, on the right-hand side there. That has moved ahead. We've got 111,000 for this example practice compared to 92,000 last year. But within that, it's okay having the overall idea that yes, we've had more PCN income in, but it's important that we know exactly where that has come from. Because if it's purely from R's reimbursements, for example, the R's funding, which a little bit of it is there, then that is an expense that has been incurred in order to get that reimbursement. In fact, some of that has come from the increase in the capacity and access funding for this practice. So again, when you're looking at your accounts, you should be able to see at a glance exactly, not just the headline figures, but the individual amounts you have received from each income stream. And this is where I just wanted to just go off piste a little bit and look at where this income comes from, because again, we're going to be looking at the set of accounts in your annual meetings in the next 2-3 months or so, but we need to know really what's coming ahead. And as you're looking at those figures, already be knowing what's going to be changing. So when we look at where income comes from, again, I've already said about local services. I'm not going to cover those at all, or non-NHS services, but I did think it was helpful perhaps at this stage in the year just to do a quick overview of some of the main income streams. And again, this is based upon an English practice on a GMS contract, but again, other English practices, PMS, APMS, these changes will be mirrored with those contracts. And again, if you happen to be in Wales or Scotland, again, slightly different for you, but the same principles apply. So those 3 documents, I've just zoomed past that, sorry. Those 3 documents are the main places we look each year for the changes to the main income streams. And the Statement of Financial Entitlements is a wonderful document that is about 120 pages, a lot of detail in it, but again, one that as a medical specialist accountant, we would be reading on behalf of our clients. But it does set out a lot of details about the payment frameworks and exactly how each item is calculated. But just to cut to the chase then, global sum per patient this year has gone up. It's gone up to £130.07 for 26-27. And the one change with this year compared to the previous few years is that has already included the DDRB uplift. So we're not expecting a further revised uplift later in the year. And again, when we're thinking about global sum per patient, something to be aware of that's happening in the background at the moment is linked to the global sum allocation formula that is a weighting or an indexation that's applied to our global sum monies in order to try and share the funding based upon the workload you find in a practice. So just a quick tip on this, most of this is fairly set in stone. It's based upon what's happening with your actual patient population, your patient list. The one that can be sort of controlled a little bit by yourself in practice is the Nursing Residential Home Index. And that's purely by ensuring you've got that VO code correctly allocated against each person that you've got in a nursing home. And it's just worth checking that every quarter, really, a couple of weeks before the end of your quarter. Have a look at your GP statement, your monthly GP statement, and there'll be a line there that gives a head count for your number of patients in residential care. And just be checking that that ties back on your clinical system to the number that you actually have registered patients in all your homes. And the reason for making sure this is up to date and is correct is the weighting. There's an additional weighting added to your monies. So in effect, you're losing out on that if you haven't coded the patient correctly. The other thing to mention is that it's been, well, we've been aware for years and years, perhaps 15 years, 20 years ago almost. It soon became out of date once we had the Cahill funding formula back in 2004. And certainly when I was working in practice, sort of 2010, 2015, it was already something that wasn't necessarily working very well. So there's a formula funding review underway at the moment. And I suppose the big question, as always, is how much will be redistributed and how much will be new funding. And again, when we have the answer to that, it'll be important to look at your weighting and any sort of impact that will have on your practice. And also just to remember as well, back in 2004, we had something called MPIG, the Minimum Practice Income Guarantee, that actually funded the gap back then when the Cahill funding formula was put in place. So we don't know whether there'll be any sort of funding gaps or any sort of vehicle used to help practices. Looking at the 26-27 income streams then, we had back in 25-26 in these accounts, we had advice and guidance. So we already know that that's now included in core activity and the funding has been moved to your global sum money. So that won't be ongoing after this year. So it would be good to take that figure from your annual accounts and sort of make a mental note of it. Similarly with weight management as well, that £11.50 per head has ceased, and you've now got a little bit of extra funding in QOF with 2 new QOF indicators for obesity. QOF changes as well. When we're looking at the annual accounts, you will see for 25 and 26 compared to 24-25, there will have been changes there because we've had a change in the number of points. So going back to 24-25, we had 635 points. That has then reduced for 25-26 to 564 points, which is an 11% reduction. But the other thing to always remember alongside any sort of significant changes in points is, although it appears that we've had an increase in the QOF point, that generally, as you can see from this, just matches the increase in the contractor population index. So despite the point amount of pounds going up to £227.95, there's been a 1.1% increase in the CPI, which basically means there's no real increase in the point. And you could actually say that there's been a decrease because there's no inflationary uplift in that either. But the main thing to notice at the moment, as I said, is the QOF point. So we had an 11% reduction. So we will see a reduction in that income stream on our 25-26 accounts. 26-27, we've had a small increase. So a 3% increase with a few new points added to give us 582 points. And again, it's looking, as I said, I've called this session the story behind the numbers. It's again looking at what's really happening to this money and where the funding's being repurposed. So we've got these 2 new obesity related indicators, so some funding moving into that. We've also got a couple of changes, certainly with the diabetes, heart failure indicators. I'm not going to go into all the QAF changes in detail, but I would mention the change in the calculations for the childhood vaccinations. So this is an area where a lot of practices have struggled to get any points and obviously get paid for the work they're doing. And the change in the contract for 26-27 is that there's going to be 2 separate calculations done, and you will be awarded the points for the calculation that yields the higher points value for yourself. So the first calculation is the same old one that we had previously, looking at practice achievement, and then there's going to be a second improvement calculation. Again, I'm not going to go into detail, just to flag that it's there. If you go back to the QAF documentation, there is a couple of examples in that documentation if you're interested to go and look at that. And then the last document I mentioned included the information about PCN funding. And again, really important this year because we've had quite a large shift again with the capacity and access funding ceasing. So looking back from 24-25, 25-26 up to this current year, 26-27, I've just put in green where it's had an uplift each year and red where it's actually decreased the funding. But really just to draw your attention to the lack of the capacity and access funding, the fact that that has ceased, and the funding is now going to be available direct to practices in the form of the GP reimbursement scheme. I've got a couple of slides on that next, but just to mention as well the changes to the GPRs as well. So the maximum reimbursement has increased, and really good news that they've removed the restriction about the recently qualified aspect for our GPRs. But the GP and reimbursement scheme, the detail came out a couple of weeks ago now about this, and it's linked to the additionality sense, so additional sessions of salaried GPs that we can put in place in practice. So again, it's about reading all the detail behind, making sure that you meet these criteria, but also I just wanted to highlight that one of the things behind this is when we were getting the capacity and access money, generally we got that on a monthly basis, and it sort of pump primed our ability to pay out for our staff. The fact that we've no longer got that is going to be something that we need to be careful of with our cash flows, but also we're going to be claiming this in arrears as well. So any new staff that have been salaried GP sessions, for example, that are going to be employed by the practice, again, you will be, my understanding is, will be claimed in arrears and paid in arrears via CQRS. So again, something to manage with your cash flow. The other aspect that I've picked up is that the scheme isn't guaranteed beyond the 31st of March 27. So it's really important when you're putting your contracts together that you take proper advice to make sure those contracts cover that. And have a look as well at the total amount that you can claim. Again, it's been capped at £4.57 against your practice adjusted population back in January 26. Compare that to what you potentially got for your capacity and access monies, your CASP and your CAPE previously. And then don't forget all your reimbursements as well. So a lot of these reimbursements would be put in our section of other NHS income. Obviously, drugs has its own section, but it's your rent, your business rates, your water rates. So key at this time of the year is making sure if you're eligible to claim your business rates, get that claim in and make sure that money flows into the practice alongside something like your CQC fees as well. Locum fees, again, there's been a little uplift on that. So this wasn't on the original SFE for the current year. It was then tagged onto the bottom of the amended SFE that came out a few weeks later. So maximum amounts payable have tweaked and been changed slightly there. So again, go and check. But again, it's really important that you know that you can claim these locum reimbursements, for example. A little bit of a financial action plan, I think, is needed based upon all these changes. So when you're looking at your profit and loss account and looking at that income, that will be another place that you can get these amounts from. But if you're still in the position of not quite ready for your accounts meeting, which again, we're only just early June, aren't we? So there'll be very few accounts ready at this stage. Go back and have a look at your annual activity report on CQRS. You'll be able to take that advice and guidance figure, you'll be able to take your weight management figure from there, put those into your calculator alongside your QOF changes. And again, you might have somebody in practice who's able to run the QOF numbers for you on the new QOF rules and changes. But if you haven't, take the new aspiration payment amount. That's probably the easiest guide to the changes on QOF for you. So when you get that amount, it's a monthly amount, so multiply it by 12, and that will be 80% of your yearly amount. So just then round that up to 100% and compare that to last year. Again, the GP reimbursement scheme, have a look at how much you were going to be able to claim from that and do that little check as to how much you were getting for CASP and CAPE last year. And then last but not least, certainly look at your global sum, check your PCSE statement. You'll be able to see what you've got for your 4 quarters last year and then calculate the increase or decrease potentially if you, well, won't be a decrease at this stage because you won't be having a reduction of patient numbers that would outweigh the uplift, but calculate the increase on your current quarter and then just monitor that, certainly as we go into July, if you've got any changes in your weighting or your list size that could influence that either upwards or downwards. So that's really where we stand with the profit and loss account income. Lots of income streams there to be keeping an eye on. Turning over the page, we get our profit and loss and expenses. And again, it's a similar story. We have our 2026 figures on the left-hand side, comparatives for 2025 on the right-hand side. And we split it down again into those subsections. So our subsections we use, we have practice expenses, which we split again between staff and other costs. We have surgery expenses, which largely are those relating to the building, to the property. And then we have administration expenses at the bottom. The main expense you will have are your staff costs. And this is where it's useful to actually split it out into the individual sort of teams that you have. So into your ancillary staff, your nursing staff. A lot of practices obviously will also have salaried GPs, you may have pharmacists, etc. Locum fees, our staff. All important that we actually look at those individual areas and look at the changes within them. For example, with your ancillary staff, it might be that you've not replaced an admin team member because perhaps you're now using some triage software and you've found that actually that has meant that you're being more economical across that staff team. So just on that topic again, with your staff costs, again, you'll know these figures, I'm sure. We've had that uplift for 26-27 and for the national living wage to £12.71. Again, a 3.5% pay review, body's recommendation there, compared to 4% last year. But I think the other thing to remember here is the employers' NI changes we saw last year. They're still there in the background, obviously. They haven't changed, but they are still causing that extra cost against our staff team there. So that's our income and expenditure detail that follows the summary page. The next main summary page I mentioned is our balance sheet. And again, this is a snapshot of a moment in time. So it's purely what was happening on the 31st of March 2026. Exactly how much did we have in our bank account on that day? How much stock did we have on our stock shelves, etc. So already by the time you get to your accounts meeting, these figures will have moved onwards and have changed. But I just wanted to explain a bit of the terminology that we see on the balance sheet. And the first bit of terminology is our debtors and creditors. So when we're preparing a set of accounts, we use a fundamental principle in accounting called the accruals concept. And that sounds all very grand, but it simply means that we're recording income and expenses when they're earned or incurred, rather than when they're received or paid. So if we've actually earned some money in the year, for example, for QUAF, it's irrelevant that some is paid after the year end. We pull that back into the year and we account for that within the year when it's earned. And you'll see in a GP practice that there's actually quite a lot of significant income areas that we're paid for after the balance sheet date. There's often a time lag before we get paid for a lot of these. And again, you can probably add a few more to my list there as well. So just a few ideas there. Things like your medical student income can be months down the line before you get that, because they perhaps do a 4-month placement. And then by the time you've claimed and got it from the university, it can take a little while. Again, insurance claims, locum reimbursements, drug reimbursements, there always tends to be a time lag for those. And alongside debtors, we talk about prepayments. So we group them together, but prepayments are slightly different in that that is actually relating to a cost that we've incurred already, but it actually relates to the rest of the period after the balance sheet date. So for example, a training subscription, you might sign up for some e-learning course to be available for your staff for a 12-month period. If it runs from January to December, then only 3 months of that cost that you've paid up front relates to our accounting year. The 9 months of it doesn't, and that needs to be put to one side, ready for next year. With our current liabilities, we've then got our creditors. And this is where we've got things like our drug purchases, our utilities costs that are paid in arrears, but also things like our PAYE and staff pension are paid sort of middle of the following month after the payroll, where you have in fact incurred those costs. So again, they all need to be looked at individually to ensure that we've included the right costs within the right period. So that's our debtors and creditors. I also highlighted on that page about our capital and current accounts. Are they the same or are they different? Because this is certainly an area where I think that they get sort of used interchangeably. And again, in a way, on the one hand, that's fine, where people sort of know half what they mean, but I also wanted to just give you the true meaning of what it really does mean for a capital account. So a capital account generally is something to do with property or equity, and it's something that you can't readily access. So a capital account wouldn't be something that you would be able to draw down upon from your GP partners at a sort of short notice. The only time when the capital account balance generally changes is when perhaps the property has been revalued or perhaps some capital has been paid off. So it's not something that perhaps happens every year. And that's when we go back to our set of accounts and we flick over the page from our balance sheet and we come to the fixed asset note. And that's where you can see here that the partner's capital account there is represented by the surgery premises. So if you just remember at the end of the day, capital accounts are often linked to equity in a property. Current accounts, on the other hand, particularly if you're a practice manager and you're trying to manage your working capital and have the funds available to pay your staff, pay your suppliers, etc. That is where you find the current accounts comes into play. But again, I just wanted to highlight the sort of relationship between the current accounts and the cash balances in your business, because they're not the same. So this is where, if I just go on to my next slide, it's easier to explain. So in this set of example accounts, you've got a partner's current account total balance across all the partners of just over 77,000. When we look at our balance sheet on the right-hand side here, you'll see that that figure is highlighted in green at the bottom there, but you'll see that the actual cash balances, where the yellow star is, are actually just under £28,000. That is why at the balance sheet date, if all your partners came to you and said, can I have my current account balance paid out to me? There's no way you can do that, because actually some of that current account balance is your working capital. So it's tied up with the amount in your debtors, particularly with the amount owed for your QOF, obviously at the year end, and it's also tied up with some being owed out to your creditors as well. So when you come to the year-end accounts meeting, often if that's after you've had your QOF monies, some of that debtor there will have been paid off, and that's when it's usually more able to look at those current account balances and perhaps do a lump sum divvy up or some sort of payout for your partners. So while we're thinking about the current accounts, so flicking over the page again in our example set of practice accounts, we come across the current accounts for each of those partners, and it's where we look at how much profit has been allocated to each partner, and then we just recognise that it's not just the cash drawings that are being taken off that, but it's also the superannuation. It's part of their drawings out of the practice that the superannuation does need to be included. If we go on to the next page, we then get to the profit allocation, and this is where we get our figures from for putting into the current accounts for the amount earned in the year. And just the difference between two sides of this. So the first top part is where some income and expenditure has been prior allocated in a different ratio to the balance of the profit. So the balance of profit will be usually allocated based on the number of sessions each person is doing, but there may be a few expenses, such as professional indemnity, for example, that's allocated on an individual basis. And this is what we are talking about when we say we prior allocate something in profit allocation. We've also got the drawings there. So we've got our monthly drawings. There may be some additional lump sum payments, and there may be a few other bits and pieces that are paid out during the year. Really important, again, that your partners have the detail of this so they can look at it and know exactly what has been allocated to them in their current accounts. We then have the tax calculation pages, which, as I mentioned before, are purely there to just calculate those figures for the partnership and individual tax returns. Before we move on into our appendices, Appendix A, the QOF calculation, will probably look quite familiar to you with the changes in the points there. We include that there so that it's very clear as to the debtor that's included in the accounts that relates to the QOF monies. And then we have a superannuation memorandum, and this is the bit that obviously looks quite technical, but just to break it down a little bit, all we're doing here is making sure that any pensionable profits that have been earned in this year, we're then doing a calculation to calculate the estimated liability that's been incurred. So again, it can be applied against the profits here. We look at our calculation and we compare that to the actual deductions made there. And we also look at what outstanding pension forms have been brought forward or estimated amounts relating to them from previous years, what the actual amounts are that have been paid in the year, and any provisions that we need to carry forward. And then as we head towards the end of the set of accounts, we've got our practice statistics here. So the statistics are a really interesting bit of the accounts. And this is, I think, where the partners, when they go out to discuss the accounts with our clients, spend a lot of time. Because we're a member of AISMA, the Association of Independent Specialist Medical Accountants, we have access to benchmarking data that would be included in a separate column on a set of real practice accounts. And again, it's not just looking at the comparative statistics for the current and the previous year for the practice, but also then we're able to benchmark against an average practice, whether that is dispensing or non-dispensing. And again, it's looking at the pounds per patient head for a lot of these areas, but also looking at the split for the profit per full-time equivalent partner as well across NHS and non-NHS sources. So really good to have a discussion with your medical accountant on some statistics if they're able to provide these for you. And the other thing that goes on in the background, certainly when we're preparing a set of accounts, is where we do something called variance analysis. And absolutely key tool when we're looking at it. And it's something that certainly my team do throughout the year as well. And it's about taking that step back and looking at the figures. Are they reasonable? Are they what we expect? Certainly, are they in line with changes to national funding, for example, or talking to our PMs as well as to why some of these figures have changed. And sometimes it's really difficult as a PM to be able to take that step back and sort of look at the figures almost from a distance almost, because you're so involved in the detail and getting your accountancy software reconciled and up to date. And that's where, again, as a medical specialist accountants, we're really able to safety net our practice managers and spot things like, was the missing drug income? Perhaps there was a quarterly payment for minor surgery that suddenly, bottomed out. Everything was going along nicely for quarters 1, 3, and 4. Quarter 2 just didn't look quite right, and it might have been that perhaps only injections were claimed for and incisions got missed. Little silly things like that when you look at them globally can make quite a difference. So I'm just coming to the end now to allow time for a few questions, but I hope what I've managed to cover this morning is sort of an explanation of certainly some of the main pages. So particularly the profit and loss account. I know I spent a bit of time there looking at the income streams there. So important that we know what's happening with the income streams, because that is where there's huge changes happening year on year. Allocation of profits again, if there's any changes in the partnership makeup, that's important that you notify your accountant, because they will need to perhaps look at the estimate of pensionable profits, for example. Balance sheet again, snapshot of the assets and liabilities. It's where we look at whether we've actually got enough cash in the business, the liquidity of the practice. And again, I showed you how we link that back to the current accounts. And again, really important that you take advice when you're looking at your amount of drawings that you're paying out to your partners each month, perhaps the balance of funds that is retained in the current accounts as well, as that will differ between practices.
There we go. So yeah, just from my perspective, once again, I'd like to thank Katie for joining us today. I'm pleased to confirm that we will be delivering more education throughout 2026. So please keep an eye out on our social media channels and also on our webinar registration page for future events. And as an attendee of this session, you'll also be notified of any future events. So I'll drop some of those and the link in the session in this chat in a second. If you could go back one slide, please, Katie. Apologies.
That's all right. There you go.
So yeah, as we draw this session to a close, I'd just like to remind you that Williams Medical is here to support you as one of the leading partners for healthcare professionals in primary care. We are dedicated to supporting your everyday, both from a service perspective and also through added value and education, as we've been able to deliver in partnership with Katie and Sandison Easson today. You skip forward, Katie, please. And I'd also just like to remind you that you can earn rewards every time you shop with Williams Plus. This is our reward scheme at Williams Medical. This applies to products in our disposables, pharmaceutical and equipment categories, as well as our medical services division. You can find out more about your eligibility and enroll by visiting wms.co.uk/Williams Plus. Okay, and I don't think we have any further questions. Lots of thank you. So yeah, once again, thank you all for joining us. Yeah, thank you, Katie, and thank you everyone who's joined us on this webinar today. Like I mentioned at the start, we'll forward up with some resources over the coming days. And yeah, please don't hesitate to contact either of us if you need any support. We look forward to seeing you all on more webinars throughout the year.
Yes, thank you very much, and thank you, Kieran, for inviting me.
Pleasure. Thank you.